good, y'all? We're going to be talking about candlesticks in this video. There's a lot of them out there, the patterns that is. You could screenshot this if you want to, but you could just Google it, which would probably be easier because you can probably get a better quality one. But yeah, there's a lot to focus on. I mean, there's a lot of them that you could look into, but there's main ones that we're going to be focusing on, which are going to be the hammers, the engulfing candles, the inside days, as well as doji candlesticks. And there's different context makes them different as well. You know, you could have reversal patterns, you could have neutrals, and you can also have continuations. So let's go ahead and start with the first one, which is going to be engulfing candlesticks. As you can read off the slide, engulfing candlesticks is whenever the newest candle fully covers the previous one. So let me think about this. So for you, the small candle is going to be right here, and the bigger candle is going to be right here. So at the top of an uptrend, if you have a smaller green candle and you have a bigger red candle, it's a bearish engulfing. So basically, we've been in an uptrend this whole time, and then we have this big ass candle showing that like bears are now in control. We can expect a downside move. And basically, if you were to make a trade off of this, you'd probably have your entry right at the close of the bearish candle, which is the bigger one on the right hand side. Sorry, excuse me. And you play the downside. Your stop loss would probably be the wick or the high of that previous candle, the big one. For a bullish engulfing candle, you do the opposite. So again, you have your red, smaller candle, then you have your bigger green candle. And the way you play it is you expect it to go to the upside because it had such a big move and the buyers are showing that they're stepping in that day. So the stop loss would be at the bottom of the low of the previous candle, which is the big ass engulfing one. And then your entry would probably be at the body close at the top of the green candle. And from there you'd write it out. Again, context doesn't matter. These are trend reversal candles. You don't want to just trust the trend in the candlestick. There's other confirmations that you want, but this is a good start in order to create a trading plan. The next one we're going to be looking at is also a trend reversal candlestick pattern, which is hammers. And just like in poker, there's different strengths to these. You know, some of them are more, I guess you say, convincing than the other ones are. Just like the royal flush is way stronger than the two of a kind, the shooting star is way stronger than a hanging man in an uptrend. Context does matter for these as well. In an uptrend, if you see a shooting star, the red shooting stars are stronger than the green shooting stars. The green shooting stars are stronger than the red hanging mans, and the red hanging mans are stronger than the green hanging mans. Let me explain to you why. So in a shooting star, basically, let's say at the top of an uptrend, the bulls are in control. They're basically bringing the price way up here, but then the bears step in. They're like, we're not letting you go past this price. So they bring it all the way down. And if it's red, again, like we spoke about in the previous videos, that means the close is below the open, which means you're down on the day. So even though the bulls brought it all the way up to this price level, the bears brought it all the way down and even below the open, leaving this big ass wick at the top, creating a shooting star. And the hanging man, which in the downtrend is called the hammer, what happens is basically that it opens right here, the bears bring it all the way down, the bulls step in, and they're like, we're not letting you bring the stock any more down than it already is. We're stepping in, we're taking control. And what they basically do throughout the day, which because we're looking at the daily time frame, they bring it all the way back up, and if it's a green hammer, that means that the close is above the open, which means it's positive on the day. So despite it coming all the way down here, the bulls brought it all the way back up, creating a green candlestick. And that's why in the downtrend, the green hammers are stronger than the red hammers. The red hammers are stronger than the green inverted hammers, and the green inverted hammers are stronger than the red inverted hammers. There's levels to this shit. The next one we're going to be looking at is inside days. These are neutral candlestick patterns. They don't necessarily need to be the top or bottom of an uptrend, because usually people day trade these. But if it is the top of an uptrend like this one, and you see a break to the downside, then you would want to play the continuation. So basically for these are the opposite of an engulfing candle. So you have to the left, the first candle is going to be a big candle, whether it be green or red. And then right next to it, you see a smaller candle, green or red. And in this case, it's a big ass green candle to the left. And then you see a red candle, a smaller one that fits within the body of the previous candle to the right. And what you'd want to do is you want to play the break of these candlesticks. So if if it passes the close of the big green candlestick to the upside, you'd want to play the upside move. If you see it break down down the bottom of the big ass green candle, you want to play the downside of the move. And if you were to play the upside, obviously the stop loss would be the bottom or the very lowest point of that big candle. And if you were to play the downside, your stop loss would probably be at the top or the highest point it reached during the big ass candle. And you want to get in once it breaks to the downside, like I mentioned previously. Again, these are more of day trade type candles, because they could just be like little moves quickly to the downside or quickly to the upside. But if they're at the top of a trend or the bottom of a trend, then you can't play them as well. And also, they're kind of like springs. So the more inside day candles that you have in a row, the bigger the move is going to be to the upside or to the downside. And also, obviously, on the daily time frame, if you have them on the daily time frame, they're going to be a bigger move than you would have had them on the smaller time frame, like a 5 minute or like a 30 second or something like that. The next one we're going to look at is Doji candlesticks. The top two are neutral. They're called spinning top dojis. And basically, the open and close is damn near the same. It could be a little bit bigger. The close could be a little bit higher or a little bit lower than the open. But at the end of the day, it basically looks like it's just like a neutral zone, a flat line, basically, throughout the day for the body. So there's tons of fluctuation. We don't know who's in control. But technically, these could be a trend reversal pattern. If you see them at the top of a trend and you see this indecision, you can kind of get hinted that, hey, there might be a possibility that we might come back down. Or it could continue up, like which we'll look at here in a little bit. And then these gravestone dojis, basically you could treat it as an inverted hammer or a shooting star, depending on the context. And then the dragonfly doji, you could treat it as like a hammer or a hanging man, just depending on the context. Is the different change the different names. There's a whole bunch of different names, but as long as you can recognize what's going on in the candlestick, that's what's important.